I found something very interesting in this country, and that is the power of wanting to do things. India is the number one country that will have 460 million people moving from the countryside to the urban side.
We stand here today where I think in this audience and the online audience, we have some of the world's largest sovereign wealth funds, pension funds, financial sponsors, institutional investors, and some large international developers. And I keep thinking, what has changed? There are many reasons for infrastructure to be successful. There is Atmanirbhar scheme, there's National Monetization Plan, there's Gati Shakti, where government has planned 100 lakh crores, and so on and so forth. But I believe the core pillar of that growth in the infrastructure space has been InvITs. Because I think in many ways it brought institutionalization into the sector.
And then Ruchir and I got talking and we said, let's meet. And then we said, if we're meeting, then let's meet with friends and well-wishers. And that resulted in curating this event.
We do wish to work with you, collaborate with you, so that the guidelines, the circulars or the regulation that we do bring out help the industry, ensure that the infrastructure is built.
We are not a EPC company, but we are an integrated infrastructure developer. And for an infrastructure development, capital is the raw material. We have coined one phrase, what we call it as BEST, best. And what we call is build, execute the project, then you stabilize it, and then you transfer it.
We are very selective of where we're going to go. Very selective.
No other sector provides us inflation protection. Roads is one of those few sectors which provides us inflation protection. For all the markets that Carlos mentioned, they're not there, we are there.
The Indian government is very friendly to FDI and foreign capital. And that is a significant differentiator with respect to a lot of countries that actually Carlos mentioned.
From the perspective of, HAM, I think it has had its shelf life. It's not fiscally prudent to do enormous amount of HAM going forward.
A clear global recognition that climate change and its consequences are real. You look at the transmission space now, it in fact feels like it's poised at a very attractive level. The production is increasing from a renewable energy perspective, grids are getting integrated, revenues are stabilizing, counterparty risk is lower when compared to generation. There's the unlisted option where you have no such requirements. It's fully rolled out, open, greenfield, brownfield. I think one common question that keeps coming up is, what is the quality of off-takers? Where is your revenue coming from? Can I rely on your revenue?
We are a significant investor in Renew Power, and they are building out literally every day and have been since a long time, and Parag, my colleague, knows it well here. We are actually not averse to greenfield risk, and that's not just true in renewables, but across sectors.
Once you start talking to a trader, he will tell you stories about how state blocks interstate open access. Half of the SLDs doesn't issue NOCs when you start buying. Discoms is in a mess. We have to bring competition in this sector, and the only way out is to promote open access, interstate or intrastate, whatever way they want, they can really push for.
We have kind of witnessed a lot of impetus given to the new energy segment as a whole, and not just renewable itself.
Overall, I think there is appetite from investors to invest in new energy. I'm talking more traditional infra asset managers, some private equity who has infra angle, and of course pension funds and sovereign wealth funds.
The thesis is you should be able to adapt to the situation and give it the right kind of capital which the situation needs and price it accordingly.
With infrastructure development, it is very important and imperative that our financing market is equally evolved in order to meet the infrastructure requirements of the country.
You've seen that LPs have become a lot more active about their investments and the sort of terms that they get and the terms in which they participate in those investments. I think the first major shift that you saw was after the 2008 financial crisis. The good thing for at least us lawyers is that there continue to be GPs who believe in holding the line and insisting on the same fees levels that they were doing.
We have also seen repack structures wherein an offshore entity is set up, which is a dollar bond issuer, and it invest the proceeds in form of INR non-convertible debentures.
Where we started off was
to figure out if there was a way to extract the asset out. And since schools can operate out of leased premises, there was a logical reason to be looking at asset monetization from that standpoint. And the moment you take it out, you realize that they create an operating leverage in the business, which is non-amortizing and over a 30-year period, which creates a lot of cash flows for the business.
In spite of the thought process of the government to say, lower tax regime would mean lower incentives, infrastructure continues to have much more bigger advantage.
Now, we certainly look forward to continuing our efforts of advocating policy solutions in partnership with our policymakers as they continue to deliberate and also pass significant laws, especially as REITs and infrastructure investment trusts that will support and hasten the securitization trend in India and the rest of Asia Pacific.